Hello, this is Steve Malone with Compass FX. I hope you're doing well today and you're getting some good trades. Now, for those of y'all who followed my video, my suggestions the other day when I talked about weak profit taking leads to continuation, you should already have some good pips for the week starting out. You see, there's a thing that happens in the marketplace, and it's simply a natural phenomenon known as profit taking. And oftentimes that profit taking leads to some retracement and some potential reversal. However, if that profit taking only leads to congestion in the marketplace, just some consolidation and that's it, then look for more continuation in the direction of the trend. And I talked about three specific currency pairs: the pound dollar, the dollar yen, and the pound yen. And I said each of these had the opportunity to push higher based upon that little bit of consolidating profit taking that took place. You see, what I see in the marketplace oftentimes is that if there's a good trend that's moving, then market participants sometimes want to take a little bit off the table, readjust or reevaluate their position, and then oftentimes you'll see them either add more or continue to hold into the position after taking some off the table. Well, that's what's taken place. So again, oftentimes these videos have some really good content, and if you follow my suggestions, you just might profit from it. So let's talk about what I showed the other day. Again, this video was a few days ago. It was on December the 5th, 2013. You can go back and check it out, what I talked about. But let's see what the market's done since then. Now, I talked about that the pound dollar had been more or less in a range and had broken out of this range about 62.50, and I'd mentioned that in order for the pound to start moving short, we'd have to break the 62.50 and start heading down back towards this 59 level. But what I noticed was from this swing low to the swing high, the market had only pulled back about a 23.6. Now make note, if the market only pulls back 23.6 and holds the 23.6, not closing below it and continuing down, you look for continuation. It's a very clean sign to look for. So if I go down to the 4-hour chart, you can see that that's exactly what the market did. The market pushed down, and back on the 5th, I had talked about that the market was sitting on this 23.6 right around the 163. And I made the suggestion that if it doesn't close below the 23.6, look for it to push back up. If you had followed my suggestion, you would be up in the trade here nearly 100 pips. That's a pretty sweet trade, just following this little simple technique. Let's take a look at the dollar yen. Now, I talked about the dollar yen had been in this large pennant pattern and had broken out of the pennant pattern and tested it. Now, from the last low point in the pennant to the high, I noted that it was sitting right about the 23.6. And we move in a little bit closer, you can see that that's pretty much what the market done, is pushed down, and closed right at that 23.6. And I noted that the market was way down low on the Traders Dynamic Index. When the market pushed down way down low here, the current market, but yet the overall market sentiment was up here, my thinking was if it holds the 23.6, look for it to push back up. And look what this has done. Almost a 100% move back from the top here. Again, this was a sizable trade of over 100 pips that you could have potentially profited from just by my suggestion last week. A nice move back based solely on looking for weak profit taking and then looking for continuation. Last but not least is the pound yen. You can see here in the pound yen that it was even way up high here and was coming over. But when I ran the fibs again on the daily chart, I noticed that it was sitting at the 23.6. And I zoomed in, looked at the 4-hour. I noticed that it had come all the way back down here and was having 3 higher lows sitting, guess what? Right at the 23.6. And look what it's done. From 166.17 area, so let's say you listened to my video, you got in here right around that 166.50 area. Look where you would be right now, coming up close here to 169.70 if you took that ride all the way up. And again, see how the TDI was way down low? And I had mentioned this was way down low, and sitting at the 23.6, the market's probably going to bounce back. I didn't know it was going to bounce back this hard and this strong. But again, this just goes to show you that weak profit taking, moving back just to the 23.6, can lead to some more potential profit. So, long story short, the next time you're sitting on an hourly chart, a 4-hour chart, a daily chart, it doesn't really matter what time frame chart, but you just notice that the only amount of retrace you're getting is about a 23.6. That's all you're getting. Look for the market to potentially continue in that direction. This is Dean Malone with Compass FX. I hope some of y'all have taken away from this some good information that you can use. For those of you who followed my suggestions the other day, congratulations on getting some additional pips out of the market. It really isn't difficult to trade the Forex if you know what you're looking for. Y'all make it a great day. Get some good trades. We'll talk to you next time. Bye-bye.